Welcome to Momentum Monday. Today is March 27, 2023. So last week, the Federal Reserve raised interest rates by 25 basis points to 5%. They kind of hinted that they're almost done raising, but they also kind of suggested that they don't intend to cut rates until the end of the year. The market has a different opinion. The market's basically saying that the Fed is bluffing and it's pricing in some rate cuts in the second half of the year. Either way, the S&P 500 is up about 3% year to date. But S&P is market cap weighted, which means that the bigger companies have a much bigger impact on its value. If you look at the RSP, which is the equal weighted S&P 500 ETF, it's actually down about 2% for the year. So market breadth has definitely been deteriorating in the past couple of months, and a few large cap tech stocks are basically holding the market afloat. Most notably NVIDIA, which is up about almost 80% year to date, Facebook or Meta, and Tesla. Basically, those three stocks account for all of S&P 500 gains year to date. The Nasdaq 100 is up about 17%, incredible start of the year. It seems like anything that was weak last year when interest rates were rising is strong this year, and vice versa. We might be seeing an unwinding of the inflation trade, at least in the first quarter of 2023. This is what we're really seeing. This is why the SMH, which is the semiconductor index, is up, I think, about 25% year to date. Incredible performance, still holding above its rising 50-day moving average, probably pulling back and needs some digestion here. So currently the S&P 500 is stuck in a range between its 50 and 200-day moving average. I think to be long in general, I would like to see it closing above its 50-day, and to have more exposure on the short side, we want it to close below its 200-day, like right around 390. Tech stocks continue to lead, and most of the interesting long setups are in the tech space. It's a different question that in the past week or so, many of the breakouts haven't really followed through, and we've mostly seen chop than anything else. A few setups that I keep on my radar. Fastly, they had a big range expansion and volume expansion in the middle of February, and ever since they kind of went sideways. And as you can see here, they've been tightening in the past few days. It's setting up for a potential breakout above 16, 15, 17. Another one is Axon Enterprise, used to be Taser. They just changed their name. I don't know why. They had a big earnings breakout and it's been going sideways. But this one is a bit choppy, so probably is not going to really make a big move in this tape. SC, which has been number one on the Momentum 40 list for a while, it's acting constructively. They also had a big earnings breakout here, and actually they announced their first profitable quarter in their history right here. So they had a record volume breakout, and then they consolidated above their rising 20-day, and they're setting up again. Another one, Meli, also had another foreign stock, the so-called Amazon of Latin America, has been going sideways above its 50-day moving average. It's pretty choppy though, so it's not ready yet, I think. And a couple others that I'm watching. Exact Scientist, Also the same pattern, big volume breakout at the beginning of the year, pulling back to its rising 50-day, then kind of riding it, and it's starting to get tighter, potentially setting up for a breakout near 68, 69 level. And a couple of biotechs that I think are looking somewhat appealing. We have Illumina. Carl Icahn got involved a couple of weeks ago. This is that big rage expansion here is when he got involved. And ever since it pulled back on very low volume to its rising 20-day moving average. Price action has become tighter, so it's setting up for a potential bounce here, maybe above 221. Another biotech, PTGX. Big volume and range expansion here, pull back to its 20-day, and then today it had another attempt for a bounce, another range expansion, but it came on lower volume. But I'll keep an eye on this one for a potential continuation. So this is what's going on. Basically, the Nasdaq 100 is just going sideways, consolidating its big year-to-date gains. A lot will depend on the action in interest rates. Today on Monday, we kind of saw treasuries breaking down, which means interest rates going up. If treasuries really continue lower and interest rates higher, the Qs will definitely get a hit. Being up 17% year to date when the rest of the market is looking like shit, probably it's not sustainable. So a lot will depend on interest rates. I think that's all I have for this week. See you next week.